Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 7th of August 2019, so welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos here. And of course, the main thing here is as well is the JFD Bank website, but specifically the JFD research page, where you can go and have a look at different analysis that we do on a daily basis, and I believe you can find some of them useful for yourselves. So please feel free to check us out. Yep, I believe, like I said, you could find something useful here. But for now, let's jump into the charts. Now, the first one I want to touch on here is the CAC40. So one of the indices, one of the top indices, and the French index here. You can see that of course, it's also taking a hit as the rest of them. But looking at this picture here, you can see that the index is now trading below this medium-term upside support line, a bit of a tentative one, but medium-term upside support line taken from the low of the 27th of December, and it's trading now kind of well below it. Yesterday it closed again in the red, and to be honest, looking at this, I mean, there is a possibility for this one to slide further down. Don't get me wrong, the cash index right now is just slightly above here, around the 5,249 zone, something like that, 50, something like that. So in a way, what we could do here is just play it very simple, as I like to call it, dumb and simple. Basically, if we see a drop below this 5,230 zone here, below these lows, then yep, in a way we will aim for slightly lower areas, because this would confirm a forthcoming lower low, and we could then aim for areas around the 5,160 or this little low here near the 5,152.50. So approximately around there, guys. Basically, this could be that nice potential area of support, because as you can see, previously that was the kind of the low of May, and sorry, this was the low of June, so also the low of May was around there, around these two levels. So this key area of support could play out nicely. So that's why for now, be very careful. If, like I said, we see a drop below the 5,230 zone, then yep, we will aim for this territory right here. And let me just quickly put in a nice arrow here for our future reference. But in case of the upside here, if we see, let's say, this one pushing back above the 5,300 level, now of course, in a way, the index could travel a little bit higher, fill this little gap that we've got here between August 2nd and 5th. So basically this one that we got here, and of course in that case we could see this one climbing back up towards the 5,345 level. This previously acted as a good area of support and resistance, as you can see here in the history. But of course, if that doesn't stop the bulls, then we could maybe see this one pushing back all the way towards this upside support line for a test from underneath. And don't get me wrong, if we do see such a move here, then in a way, if the index reaches this area, this could also reach the 200 EMA here on the 4-hour chart, which in a way could help keep the index lower a little bit initially. Of course, we'll take it from there, see what he wants to do after, but for now, like I said, guys, what you could do here is initially aim for the this 5,230 zone. If we see a drop below this, then yep, we will aim for the area around the 5,160, 50, something like that here, basically near the lows of May and June. So but if this reverses and pushes back above the 5,300 level, then in a way there could be a small chance here for a push a little bit higher. Don't get me wrong, we do have some obstacles here above, which I've mentioned, the 5,345, because in a way we'll have to keep it very careful, because if it's, let's say, struggles to push above this, then we could see another maybe leg of selling here, and potentially this one driving back to the downside. So be very careful with the upside. For now, any up move here is considered to be as a larger correction, so you have to be very careful on the indices. Gold. Now, gold, I talked about this one this week and on Monday and yesterday, and basically I was telling you guys to keep a close eye on the 1488 zone, so which we managed to test and slightly overshoot. And you can see that this is where the commodity got held. So in a way, this worked out nicely, and this is what I was what I drawn yesterday, basically, because it was kind of balancing. This is what I was saying. It was balancing around the pivot near the 1456 zone, and from which kind of reversed and pushed to the upside, and bang on, we had our 1488 zone getting tested. Of course, it just overshot it by a few points, and by the way, this is where it found resistance near the 1490 level. So you can see that the commodity is now kind of balancing slightly below this 14. Let me just zoom in here a little bit. 1488 zone. So in a way, what could happen here? We could see maybe a bit of a correction here. Maybe this could be something possible here. That's for the short term. For the short term perspective. In a way, we could see this little correction here back down. Of course, for those who are more on the cautious side, what you could try to do here is you could maybe draw an upside support line just for that better confirmation. So in a way, if we see a drop below this upside support line, then yep, we could see this one correcting further down a little bit, maybe aiming for this little level here before actually hitting the 1453. We could aim for this little area of support near the 1456. So basically, that's the yesterday's bouncing ground here for gold. So long story short, guys, for now, of course, all this is still looking quite bullish. If we see a good push above the 1490 level, well, guess what? We are close to the psychological 1500 level. We will aim for that one, but we will only aim for that one only because we want to see how this is going to perform at later stage, because to be honest, on the shorter time frames, it will be slightly overbought. So in a way, a small pull throwback could be possible. So that's why I'm saying, so wait for that potential throwback. The only thing is that it would be a little bit difficult right now to predict where exactly will it be from this area here, from the 1488.90 zone, a move back down towards this upside support line, or actually will it travel towards the 1500 level and then make a move lower. So that's why, in a way, ideally, what I would like to see personally, I would like to see, of course, a move lower now, and then let's say this upside line getting tested, and then another push higher and aiming for that psychological 1500 level. So for now, be very careful here. Let's see how this is going to play out. But like I said, also be very careful if, let's say, you are right now decided to, let's say, try and take or capture a move lower here, then at least probably have your stop loss just around the 1490 level, just in case this breaks above this, because if this gets a break, this would confirm a forthcoming higher high, and yet, well, it could aim for that psychological 1500 level. So that's why, guys, be very careful with this one right now. It's very tricky at the same time, very interesting and very tricky, but again, have your stop losses in place. AUDNZD. So this is quite interesting because any pair with the New Zealand dollar today is very interesting because as you're probably aware, this morning during the Asian session we did have the RBNZ interest rate decision, and basically the bank cut its rates by an additional 25 basis points. I mean, it was expected that they will cut only by 25 basis points, but overall they've cut by 50 basis points. So this took a negative effect on the and New Zealand dollar. The New Zealand dollar NZD sold off heavily against its major counterparts, or actually about against all of them, and you can see by the picture here the neighboring Australian dollar here benefited, and you can see AUDNZD pushing to the upside and breaking this downside resistance line taken from the high of the 31st of May. Now, of course, this is going to be very interesting to see. Of course, as you can understand, that we are quite overstretched here on the shorter time frames. In a way, if this continues to push higher, and it could, to be honest, continue pushing higher a little bit more, we do have a good potential area of resistance around here. Let me just quickly put this one on the chart. That's near the 1.0492 zone. In a way, there could be some still room for this one to travel a little bit higher here, maybe test this 1.0492 and then reverse back to the downside, test this downside line from above, and then we'll take it from there, because if it continues to hold, this could be a nice good sign for the bulls to join in and jump in again and push this one higher. But if it struggles to keep the rate if the bulls struggle to keep the rate above this downside line, then well, we could see another leg of selling here, maybe a deeper one here, traveling back down. We'll get slightly more comfortable with the downside if we see not only a drop below this downside line, but also a push below the 200 EMA here on the 4-hour chart, and that would be approximately around the 1.0450 level, so approximately around there, guys. And then we will aim for this little high here near the high of 4th of August, near the 1.0428-29 zone, or even going further down towards the inside swing high here of the 6th of August near the 1.0395 zone. But again, like I said, this is in the scenario if we would see a drop below the downside line and below the 200 EMA here on the 4-hour chart. For now, any kind of move lower here could be seen as a correction until it's trading above this downside line. So that's why, guys, be very careful here with this pair. There is, like I said, there is still some room for the upside, and given the fact that NZD is on the weaker side, especially today, so expect maybe another good push higher. GBPNZD, very quickly on this one. So this morning you can see also it blew up to the upside, also broke the downside resistance line taken from the high of the 5th of May. This is a bit of a tentative line, but nevertheless we're keeping a close eye on it. We had a nice push above it. It did break of course our key resistance level here near the 1.8830, and the pair traveled all the way here towards the 1.9028 zone, and actually even overshot it a little bit by a few pips, so it managed to reach the area near the 1.9060, approximately around there, and then you can see that now it's kind of retracing back down a little bit, going for a bit of correction. Don't get me wrong, this is still looking quite strong, so any move lower we will class as a little correction before another leg of buying. First, let's say now to get bearish on this one again, well, we would like to see a drop back below the downside line, and of course below this 1.8830 zone. So, and only then we will consider lower levels again. So for now, like I said, any throwback lower here could be seen as a correction, as long as it continues to trade above this downside and this tentative downside resistance line. If it does, then yep, that's good news for the bulls. We could see this one reversing and pushing back to the upside. But if it drops below the downside line, then yep, brace yourselves, we could see maybe some more downside. EURGBP, very quick update on this one. because it's being slightly annoying. So yesterday it did have a nice move lower here. I was talking about this one yesterday in my videos, and basically it did break our 0.9190 level. It traveled perfectly lower, tested our other support zone near the 0.9170, did have a false breakout, as you can see here, and quickly reversed back to the upside and kind of closed the day above the 0.9190. Today it's stuck here. Basically, we can actually get rid of this upside line, no longer valid, because it's a bit of a it was initially a bit of a tentative one. So now first the main focus lies on these two levels, these two potential breakout points. So on the upside is the 0.9050 level still remains that one for us, because that's the highest point of this week. A break of it above it could open the path towards the 0.9270 or even the 0.93 zone. Because this way a break above the 0.9250 would confirm a forthcoming higher high. But in terms of the downside here, now we'll of course initially we will start considering the downside if we see a drop below the 0.9190 again. But just for that better confirmation, right now at this point in time, ideally a drop below the 0.9170 in a way could do the trick here for the bears. And we could maybe aim for slightly lower areas here. So for now, be very careful here. Keep your eyes on these potential two breakout points, and let's see how this is going to play out. And a quick mentioning of USDCAD, which worked out nicely here. Yesterday I talked about this one, and to be honest, this is what this is what we've posted here on TradingView and on our account. And this is yesterday. It was closer to the lower side of the rising channel here, but this is what we've mentioned, that as long as it kind of stays intact, we will aim for higher, and we will for higher levels, and we will aim for the upper side of the rising channel formation. So we did get a perfect hit of that. To be honest, we got the hit straight away. So that's why for now, guys, of course, kind of in a way it's completed our main scenario. So for now, what we could do here is just probably first let's get rid of some of these arrows, or actually let's shift them, recycle them. But for now, keep your eyes on this one, because if it continues to hold, we could see this one maybe correcting back down again, maybe testing the 1.3267 zone again from above here, and pushing back to the upside, and maybe again testing the upper side of the rising channel. Of course, if this rising channel gets a break through the upper side here, you could see that steeper uprise, initially aiming for the 1.3330, but if that is just seen as a temporary obstacle, the next potential target could be around the 1.3387. So keep your eyes on that one. This area acted as a good inside swing low of the 17th of June, and also the high of, or near the highs of the 19th of June. So good potential target here, but again, for now, that's only in the scenario if we see a break of the upper side of the rising channel. If this suddenly, let's say, drops back below the 1.3267, then, well, in a way, this could open the path towards the lower side of the rising channel, and we could see a bit of declines here. And yep, we'll take it from there, see what it wants to do. And if it wants to break this lower side now, then yep, we will aim for lower levels, but still, just for that better confirmation of the downside, ideally a drop below the 1.3172. That's what we would need in order to kind of, let's say, get comfortable with further declines. Okay, guys, I really hope you found it useful. Thank you very much for sticking around. I'll have to wrap it up here. If you want to join me to later on today at my trader's tea time, as always, that's 13:15 GMT. For now, I hope you have a wonderful trading day, guys, and I'll see you later. Bye bye.